Hello, I'm Tim Beggins, president of L Trading Company. In today's midweek natural gas report, natural gas prices are up slightly. 283 for the September spot contract, up 2.2 cents or 0.78%. As you can see here from the daily chart, we still remain below the 9-day moving average, and of course below the 21-day moving average. These have crossed over way back over here at late June, and we've gotten nothing on the signals other than stay on the short side, unfortunately, all the way through. Yes, there's a little bit of residual heat. Yes, cash prices are above the screen, but we're looking at a storage report somewhere around plus 55 BCF for tomorrow, which goes against the very low number that we had last year, which was a -2, and a 5-year average, which is in the 30s. So unfortunately, there's going to continue to be some pressure on the front part of the board. And let's take a look at the hourly chart for the September contract. And as you can see, we did hold here. The RSI is trying to move higher. We are just below the daily pivot, which is at 285.60. Above that, resistance will be at 293.70, and well above that, you can see at 306.70. So we do need to see some upside momentum above this pivot. Otherwise, the sellers will come back in as soon as they get past the storage report. Let's take a look at the front to back spreads. This is a suggestion from one of our viewers. Let's take a look at Dece versus November. And we're just going to use two simple moving averages here, excuse me, exponential moving averages, the 13 and the 48. And as you can see, we got a buy signal way back in March on this particular crossover with the moving averages, and it has held all the way through here right now. We're still seeing that this spread wants to widen out. Why? Because as we get closer and closer to being spot, the cash prices just continue to fall back as we lose summer, as we look to get into the fall, when we start really just unfortunately having to build stocks here as we press along toward that 4 TCF level in storage. Expectations right now are running somewhere between 3.91 and 3.6 TCF by end of season. That would be November the 1st. So continue to see this spread here. We're looking for this spread to continue to widen. And let's look at the Jan versus October spread. Once again, we're back up here at 133.90, although it does want to just continue to hold in this level. Look to see if it can move higher. Again, this is taking on those same exponential moving averages, the 13 and 48, and it continues to hold on a buy signal. That means that it should continue to widen out. We'll continue to watch this carefully as we get closer and closer toward winter. And here's the 8 to 14-day temperature outlook. We lose the heat in the eastern half of the United States, except for South Florida, with actually some below normal temperatures now coming into New England. So we're going to have an interesting fall here, above normal out west where there's a continued drought, but maybe potentially some cooler weather in the upper mid-Atlantic states and New England. So what else is going on? The tropics. We've got tropical storm Erin, and this is tilting this way toward the northwest right now, and it is dropping now in temperature, pressure down to 1004 millibars. So this is expected to strengthen into a major hurricane by early next week and be somewhere off the coast of Florida, bending hopefully toward Bermuda and out to sea. But we've also got disturbance here potentially up near Massachusetts. This is only a 20% chance of formation in the next 7 days. But here's our next outlook right here in the Bay of Campeche. We possibly have another 20% chance of a cyclone formation in the next 7 days near the eastern side of the Yucatan Peninsula. So watch out here. We're going to see some more activity as we get closer and closer toward peak hurricane season on September the 11th. And here is Tropical Storm Erin. As you can see here, it is a storm, is expected to remain a storm through Thursday. That's tomorrow, that's tomorrow. And then strengthen to be a hurricane overnight, and then a major hurricane by Sunday. So we'll keep a careful eye on it. It is expected to bend to the north and out to sea, hopefully. And here is the floater for the satellite picture. As you can see, it is tilting actually southward. So we got to be a little careful with this. that the cone of confidence doesn't bend a little further and pull the East Coast into that potential hazard. And these are the model runs. As you can see here, it is expected over these model runs to bend toward the northern side of the Windward Islands, north of Puerto Rico, and then as it gets north of Dominican Republic, start to bend out to sea and hopefully never touches land. And here's where the tropical hazards are going forward. As you can see, the mid-Atlantic is starting to fire up. This is the expectations. As you can see, this is the highest area of concern. And then as we continue throughout the rest of the month into September, we're watching this area here about the mid-Atlantic all the way through the Dominican Republic. Let's take a look at our stocks for the oil and gas E&P sector. These are stocks between $2 and $10 billion market cap and have a high short float over 10%. And as you can see right now, really not a lot of green on the board. CNX up 0.83%, Magnolia up 0.61, Murphy up 0.65, Northern Oil and Gas up 0.36, Apache up 0.28, but Comstock down just slightly. This is just today. So really no movement here on the oil and gas E&P sector. And again, recapping here, we're moving a little bit higher for the September contract. We're currently trading at 284.10, up 3.3 cents or 1.18%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.